Bullish Investor here. How are you, YouTube? PE ratio. What is it and how do we use it as a metric in helping us choose a stock? We're going to go over that today. So simply put, the PE ratio is the price we as investors are willing to pay for $1 of that company's profit or earnings. In other words, if a company is reporting earnings per share of about $3 and the stock is selling for 30 per share, the PE ratio is 10. If a high PE ratio, it could indicate that investors are expecting higher earnings. However, a stock with a high PE ratio is not necessarily better than one with a lower, as a high PE ratio can indicate that a stock is being overvalued. And next, we're going to look at two examples, a stock that I own in Coke and one that's directly comparable, Pepsi. Let's pull it up on the computer. So we've got a PE ratio of 31.35 for Coke, meaning I'm willing to spend $31 for every dollar of Coke's profit. Whereas with Pepsi, they've got a PE ratio of 16.04, meaning I'm willing to spend $16 per dollar of profit. So it sounds like Pepsi would be a better deal. Let's go ahead and figure out how we're figuring out the PE ratio. So you got 8.79. So we got the price per share. So what did we see? Pepsi was what, a dollar or 140. So 140 divided by 8 something, and that gives us that 16 PE ratio. Okay. So Pepsi is looking like a better value, and they even have Yahoo Finance even has it near fair value. As for Coke, they're saying it's a little overvalued, but also that higher PE ratio could mean there is future higher potential earnings for this company. And the average S&P 500 PE ratio is 25.04. Coke's a little higher than the average, and Pepsi is actually a little under the average. But that's not all there is to that, because I actually own Coke. And the reason why I went with Coke was, well, first of all, I was looking at both companies because they're both dividend aristocrats. We can just pull up a quick little thing here and see that Coke has been on the list here for 57 years. And Pepsi has been on the list for 47 years. So really, you're comparing two very similar companies. And the reason why I went with Coke, even though it's a little overvalued, is because of the price. As a new dividend investor, I wanted to be able to get into the market, and Robinhood at the moment doesn't do fractional shares. Soon though, hopefully. So I wanted to buy a full share of Coke, and I actually bought 2 shares of Coke. And it just it kind of got me in the groove of investing. Next, I will be investing into Pepsi. Here we are, looking at my shares in Coke. I hope this video clarified the PE ratio for you guys. So here we are, 31.68. So that means I want to spend $31 for every dollar of Coke's profit, which is higher than Pepsi. But the reason why I went with Coke was because it's only $56 a share. The upfront cost is more affordable for me, so that's why I went with Coke. As I get better at making these videos, hopefully I can convey my thoughts a little more clearly. This video wasn't too bad today. I feel like it's much better than my first one. I finally figured out how to record my screen, so that kind of helps, I hope. Anyways, I really appreciate you guys tuning in, and we'll see you guys next time. Thanks a lot. And of course, I forgot, if you liked the video, please like, comment, subscribe. As a new YouTuber and investor, I need all the help I can get. Thank you so much, guys. Have a great day.